time to hand over to William Hildebrand.
Thanks, Chris. Let's begin with the so-called Attractiveness Council. François Hollande met with executives from French branches of foreign firms to discuss how to make the country more business-friendly. Last year, France suffered a 77% drop in foreign direct investment, while neighbor Germany saw its figure quadruple. Business leaders have criticized France's 75% tax on high earners and a corporate tax set to hit 38% this year, which would make it the highest rate in Europe. Hollande plans on cutting taxes, recruiting young professionals from abroad, and offering startups as much as €25,000 in aid. Catherine Clifford has more details.
Rolling out the red carpet for foreign executives. The French president met with CEOs from some 30 foreign companies, hoping to win over some foreign investment for France.
We're not afraid of shareholders coming to invest in France. We're not looking to protect ourselves.
It currently takes several weeks for foreign businessmen to obtain a French visa, but Hollande announced today the delay will now be cut to just 48 hours. He also promised simpler and more stable tax policies. This aimed at foreign investors angered by unexpected changes to tax procedures in the past.
From now on, French and foreign companies must confirm which rules apply to them for the duration of their investment with tax authorities. This transparency is essential.
Hollande's looking to shed his anti-business reputation and to wipe away the negative effects of the 75% tax he brought in for those earning over €1 million. His ultimate goal, to restore the country's economy to former glory. Moves keenly welcomed.
I trust that the climate will improve. It should. France is successful and wants to remain successful.
Taxes are a problem, but there has been a major commitment today to re-look and to make the regime friendly.
20,000 foreign companies currently employ 2 million people on French soil. The Élysée hopes to see this figure increase by 40% over the next 3 years.
Let's take a quick look now at the markets. Lackluster trading in Europe, partly because Wall Street is closed for the public holiday President's Day. The FTSE outperformed its counterparts, closing 1.1% higher thanks to a rally in mining stocks. Meanwhile, both the CAC 40 and the DAX edged down. We'll move on now to take a quick look at other stories in the spotlight today. The UK fraud agency has charged 3 former employees at Barclays for the alleged manipulation of LIBOR interest rates. That rate is used to set trillions of dollars of financial contracts, including many car loans and mortgages. In 2012, Barclays already paid $454 million to settle allegations with British and US regulators that it manipulated LIBOR. For the first time in more than 2 decades, an advert from a large tobacco company will run on British television. British American Tobacco launched a campaign for its new e-cigarette. E-cigarettes have grown to a €2 billion industry, though health campaigners argue they glamorize smoking and will lead to tobacco being re-normalized. And the new report says women in Spain earn 23% less than men, and the inequality is even higher in the case of university graduates. While the average man earns €26,000, his female colleague makes roughly $20,000. This disparity means women also draw less unemployment benefits and lower pensions. We have time now for one final story, and it looks like fewer and fewer people are going to the movies. The European Audiovisual Observatory estimated cinema attendance dropped 4.1% last year in the European Union. More than 2/3 of the EU market saw a decline. 908 million tickets were sold, but that was the second lowest figure since 2000. The drop was driven by declines in 4 of the EU's 5 largest cinema markets, France, Germany, Spain, and the UK. Only crisis-hit Italy withstood the trend. Its admissions managed to grow 6.6% to 106 million tickets sold. Well, that's it now, Chris. Back to you.
William Hildebrand with The Business. Thanks ever so much. We're going to take a short break now here on Live from Paris. I beg your pardon. We're not taking a short break quite yet. It's web news, after which there will be a short break.